morning, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So we're going to launch the bias chart, and we're going to get started with our analysis this morning. So like I said earlier, just like a lot of second-tier data coming out today. So, I know I said this last week, so maybe I should watch what I say. We are we're in the summer doldrums, and but the last couple of weeks have been, and matter of fact, all of summer has been anything but a lame summer, no volatility that we've been accustomed to for the last couple of years. This year has been absolutely phenomenal as far as volatility goes, and obviously last week, the PBOC threw a nice little monkey wrench into our summer chill strategy. The PBOC really shook up the markets quite a bit. So and that's good. I mean, I personally, I'm enjoying it. Although last week, as I had mentioned last week wasn't a positive week for me with my positions, because I'm short the Swiss franc. So obviously the Swiss franc firmed up a little following the actions out of the PBOC, and as a kind of as a response to the move out of the renminbi. But regardless, I've actually done really well trading wise. Just my positions hadn't done also all that great, being short the Swiss franc. But I am happy about the volatility, and I'm hoping it continues. But we're looking at the last couple of weeks of summer. Here we're stepping in the last like 2-3 weeks of summer. It's really after the U.S. Labor Day weekend where things start to heat up again. But who knows? This week could end up being another busy week as far as volatility goes. But last night, I mean, if you look around at the majors, I mean, we got the euro in a 56 pip trading range, the cables 70 pips, the Aussies 37, the Kiwis 27. Those are typical summer ranges. The Canadians had a little bit more of a range, at 60 pips, but again, pretty tight ranges, and we may not get a whole lot of movement from here, but who knows? Maybe we will. Crude oil still, I think everybody's eyes right now are still locked on crude oil, and if that busts a move, that could obviously send that domino effect through the currency market where crude oil falls, dollar starts to rally against some commodity currencies. That kickstarts a dollar rally against maybe some non-commodity currency type of pairs. You never know. So it's obviously things we need to pay attention to. Well, let's start with the euro dollar, and let's go from there. So the euro dollar is actually forging some pretty key resistance at 112, and I had a short with the euro last week at 112, and I don't know why I'm not short right now. I guess I did close it out on Friday. You know what? I guess I did. You know what I did. Now I'm trying to think why because you guys were all listening in on Friday. I actually closed out Friday because I stepped up my position size, and then I just closed it all out for the weekend. But if you recall, I was short at 112.02 last week. We dropped. I covered some below 111. When we rallied back towards 111.50, I started adding again, and so my cost average was like 111.80. And then when we dropped back down into the teens, I closed it. I exited it at that time, because I remember we thought about the possibility of forging this Gartley pattern, which you can see here. Now that was a potential, and I saw the potential of this Gartley, but that's not what our right now. That should not be our focus. That's more of a, if we get up there, it's probably going to be a great short up at 113. I'm just trying to think about our analysis from last week, but we've stalled at the 112 is a pretty big confluence of resistance. It's a horizontal resistance, as you can see. 127% extension, as you can see, of this last move lower, of the highs from 114 down to 108 and change. That was a 786 retracement. or 618, excuse me, 618 retracement. Okay, so 112, as we knew last week, was a real stiff resistance for us, and it remains so. Now, a couple things I want to point out regarding where we're at currently. If you look at this trend line that we broke, okay, we've snapped that trend line, and now we're starting to pull back. So the question is that we're all asking, is that a double top? And frankly, that double top there really doesn't even come into play unless you break below 108, and 108. Well, by the time we get down there, probably like 109. I guess would be the price. But so that's not a concern right now. All right. What would be the concern is how deep of a retracement are we going to get now that we've rejected at 112? So I'm assuming that this is a 38% retracement. I may be wrong, but that's just an assumption. It is. Okay, so that's a 38% retracement. So really down towards 110, I think is going to be significant for the euro dollar. Now the question is, are we going to make it all the way down there today? It is a 618 retracement. You can see it's also previous resistance, spike highs. You can see all these spike highs through here. You see them all? I don't know. I have to be too. Just give me a second here. Just grabbing my highlighter. You can see, spike high, spike high, spike high. So any dip down to 110 is going to be very well supported, I would say, over the next 24 hours. The question is, do we get down there? I mean, do we even get down there? Because right now, 38% retracement seems to be holding pretty well. But well, I guess that's 110. Yeah, that's 110.60, 61. So if we break through 110.60, then I think 110 is going to be support. So 110 support, 110.60 is intraday support for us. Okay, so if we break through 110.60, the next stop is going to be 110. Now I'm going to put that as support because if you don't see it, the cable's trading at its lows of the day. If the cable pulls back below like 156, it's likely to give the dollar some support. Okay, so we could see the pound dollar, if it breaks lower, it could drag the euro down as well. So I don't want to just put in 110.60 because we may even take that out while we're sitting here together for the next hour and a half. Resistance. Okay, so where's key resistance for the euro? Well, one thing that I do recall from Friday saying, and what you'll notice is we are making lower highs. Okay, on a intraday basis. So that I'm assuming even if we're developing some sort of flag pattern here, which is entirely possible, that this is in development. Okay, that's entirely possible right now. Even if that is possible, any rally right now up towards 111, what is that? 111, let's say 60 by the time we get up there, it's going to be pretty key resistance. Okay, so 111.60 should be resistance. Bias is we're in a range, still in a range environment today. All right, let's go over to the cable. So the pound dollar, as I pointed out to you guys earlier, multiple failures up here around 156, 80s, which I'm happy about because I've maintained a short pound position for the last week and a half, as frustrating as it is. And as much as last week, as I told you, I just want to throw my computer out the window sometimes. It's been extreme. Hold on really quick. Let me think something. Hold on real quick. Sorry guys, I'm just checking something. Sorry, I just need to check something real quick. Okay. Anyway, um, uh, right now, I just had to check something really fast. We have 156.80 is obviously offering big resistance, so 157's key, as we've written down last week. I just need to write it down again. 157 key resistance. Now, well, support now, we have to figure out where that's at, because what we're doing is we're taking out an upward sloping trend line, okay? And I've obviously highlighted there. I actually sent this chart out to our Wise Trade customers earlier this morning. But, the question is, if we do get a little bit of a pullback, where are we going to find support? My assumption is we're going to find some support down here at 155.70. Now, there's obviously, when you're in a really tight range like we are currently, support's really hard to gauge, because we've kind of been there, done that a bunch of different times already. So 38% retracement comes in here at 155.90, 50% retracement, and then you see the 618 that comes in around spike lows. So 155.25, that seems to be really critical support over the next 24 hours. Just like if the euro gave back some of its gains, and we push down towards 110. I think the cable is probably going to find some support as we come down to 155.25. It's also the 618. So for today, I'm going to write down 155.25, but also 155.90. I think both of them will offer support. 155.25, 155.90. Okay, both it kind of intraday support, and if we clear those, we get a little bit of dollar strength, comes through the market. Just 110 and 155.25 is probably going to offer us a lot of support down there. All right, let's go over to the Swissy. So Swissy is a very similar situation, where it's in this upward sloping channel though, and it still looks really bullish. And I maintain my long dollar Swiss trades from, I started acquiring the dollar Swiss at 94, 94.70 or 94.80 is where my first purchases were. I've been in and out a bunch of it, and I maintain being long and a bullish bias while we are above that yellow trend line that you can see down here. All right, now what's interesting is you can see exactly where resistance is today. The resistance is at 98 cents. Now we have the 618 comes in at 96.10, 98.10, 98.15. Okay, right there. But my 2 cents is, if we take out 98 cents, that's going to unlock a move back up, maybe even back up to these highs. Because if this channel is still in play, then a move back up towards the 99-cent level is not out of the question. What's more important, though, is how we react at that 99-cent level, or maybe even a little bit lower, because we have this descending trend line that's multi-year, trend line that's in play that comes in, now it's at 98.70. Last week it was at 99 cents. This week it's at 98 or 98.70, because it's a descending trend line. Like I said last week, I didn't get out when we got up there, and that was my mistake. This time I won't make that mistake. If we get up there and we fail back up at 98 and change, I will be taking some of my position off the table. Okay. Hold on, I hear somebody's microphone. It sounds like Paul Franco. I'm gonna make sure I mute him. Okay, so anyway, today resistance is at, even if we clear 98 cents, I think 98.15 is going to be resistance. That is the 618. Oops, this one, we're still in a range. 98.15. That should be key resistance. That's why I'm going to put an asterisk there. We are in a bullish trend, and obviously very critical support on dips down to 97, maybe 97.10 now. And if you get down a dip towards 97.10, that's probably going to be a great place to be on the long side. For those of you that have, that still want to be long the dollar Swiss. I think, with Greece getting its bailout, Germany on Wednesdays, like, Paul said, it's pretty much a foregone conclusion that Germany is going to pass, but you never know. Um, but I think once we get past Wednesday, that'll free up. Um, I think that'll free up the Swiss to weaken again. A lot of people really, I think, jumped the gun last week and bought Swiss francs after the after China devalued the renminbi. Okay, but like I said last week, and I've said that for the last couple of sessions last week after the fact, and around Wednesday or so, Wednesday, Thursday, Friday. I don't understand why the market had viewed it as such a negative. I think it was a positive. I think these are positive steps that China is making, and it's a positive step into to China into uh, allowing their currency to stabilize. Also, positive developments as far as fighting some of the slowdown that they're seeing in China. I think this has allowed the Federal Reserve actually to give them a little bit more confidence in raising rates in September. Because instead of providing stimulus in the form of cutting rates and fiddling with the reserve requirement ratio, they're allowing the renminbi to weaken a little bit, which is stimulating. It'll in turn stimulate the Chinese economy in a different way. And so I think the Fed probably looked at China's moves last week as a positive, just like the IMF did. So I think this buying that you saw in the Swiss franc last week was a little unfounded, and don't be surprised if we just unwind all of that buying of Swiss francs later on this week and head back up towards 99 cents and maybe even beyond. That's why me personally, I'm really not worried about holding my Swiss franc shorts. I'm still trying to figure out exactly why people were buying them in the first place. All right. So anyway, if you still think that the dollar Swiss is moving higher or Swiss francs are going to move lower, a dip down towards 97.10 is probably not a bad trade. All right. Still in a very bullish trend. All right. Let's go over to the dollar yen. So here's the dollar yen, and 618 retracement. This is a quite possibly a widening. Oops, shoot, I didn't want to do that. Why did I delete that? My bad. Um, this might be like a megaphone pattern here. If you go back to our analysis last week, we were looking at 124 to 125. We broke out above 125. We got a false breakout, which I was surprised of. And I'm like, okay, well, when we get a false breakout here, it's going to lead to a false break, or it's going to lead to a breakdown. So we broke down, then we got a false breakdown, and then here we are mid-range. So now we're dealing with a widening range environment in the dollar yen, which is annoying as it is. So what do we do here? I really don't know. I mean, we're supported at 124, resistance at 124.70. If we get past 124.70, there's going to be a lot of upside resistance at above 125. So, but I do think that 124.70 is a 618. We have to respect that, and probably going to be a tough level for us to breach, especially in a environment where things are just kind of bouncing around. Support dollar yen probably back down to 124 again for now. I have just so you guys know, and I know I said this last week, but I'm going to say it again. I have like zero desire in trading the yen pairs right now. They are very unattractive to me. Like, I mean, I'm not interested in the Aussie yen, or excuse me, the Aussie yen, the Euro yen, the pound yen. They all have interesting setups. But even the Aussie yen, which I feel as long as it's below 92 yen is a good short, the stupid thing's not even moving anywhere. It's like, I mean, I guess you could keep shorting it at 92 and just cover it up at 91, but I was expecting a much bigger and broader move. We just haven't seen. This market's been really, it's just been really, kind of challenging with these yen pairs. So I've got my hands off of them, and I'm not even interested in trading them at this time. Not saying that something won't develop. I mean, we might see some good patterns develop in some of these, and I was short the euro yen and pound yen last week, and I scaled out of them last week. I flattened them, and I believe, if I'm not mistaken, I like lost 10 pips on the euro yen, and I made 10 pips on the pound yen, and that was after being short both of those for like 4 or 5 days last week. I finally just got out of them and said I don't even want to deal with them anymore. The yen, in my opinion, and the yen pairs are just not providing any good direction whatsoever. All right, let's take a look at the dollar Canadian. The dollar Canadian is a different story. The dollar Canadian looks very strong. I'm glad I'm bullish, or excuse me, I'm long. Uh, as I noted to you guys last week, I would buy it below 130 because I thought crude oil was going to break down. You guys read my blog on whether it's pibzar.com or Business Insider. You know that I was planning that trade anyway. Now the question is, are these flag patterns valid? We'll only know on a break above 132 and change, but that's where I'm adding. My position's still, not a full-size position. It won't be until we break above 132. We break above 132, I am targeting 134. Okay, so the most recent highs up here, which we're going to have to actually note, is 132.12 is a high here, 132. 132.12, and that's if we can take out the 786 retracement. Oops. So we've got 131. I mean, we're right there. I don't want to write down that price because we're right here. We're heading right into resistance right now. But let's just go with the running assumption that we break. Then 132.12 is the next level of resistance. Okay, we are still on a very bullish trend with the dollar Canadian, and support. Here, let's delete all this stuff from last week. That was following the I think it was CPI from Friday. That's where we had all that stuff drawn out. So now any dip to 130.90 is going to be very well supported. You have to imagine a lot of people and a lot of traders are trying to stand in front of the dollar Canadian. I see it over and over and over again. Dollar bears, they start percolating about the dollar Canadian if it hits any type of resistance. And now you have to imagine, if you're a dollar bear and you're short the dollar Canadian, you're probably, in my opinion, you're probably crapping your pants. Excuse my language, where you're probably a little nervous right now, right? So if you're short the dollar Canadian, you got to ask yourself, where are you going to look to cover? Because whenever I trade, I try to put myself in the shoes of the opposing trader. So even if I'm not long or short, but I have to imagine, if I was short where would I say, oh God, thank God we got back down there because I need to cover? Because right now I'm long. I'm sitting in the driver's seat right now. I'm long. I'm not worried about it. But if I was short, I'd be a little worried. So if I was short, I'd be like, oh my God, look at this acceleration. Any dip now below 131, I'm a buyer. Okay. And so you have to think about that strategically, because if you are not long and you're like, okay, where would anybody who's short where would they want to cover? Yeah, they'd probably want to take any dip down here to 130.90 as a place to get out. So if I wanted to be long, that's probably a good place to be long, right? 130.90. And that's if we get there. If. All right, when I come back, we're going to do the Kiwi, the Aussie, the dollar index, maybe the peso, Nordic currencies. We'll see what's going on with them. And then I'm going to take your questions. We're going to look at what's happening in the futures and what's happening in gold and crude and bonds, and we'll map out we'll map out a trip to go see the stars in Hollywood, everything. All right, I'll be back in a few moments. Don't go anywhere. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So we're going to finish up with the Aussie, the Kiwi, dollar index, all that fun stuff. Oh, hold on really quickly. I just realized I didn't even have my dollar index up. Give me a second. Yes, just grabbing my chart here. 1 second. Be there in a minute. Okay. All right. Here, just so I have that available now. But we got to start with the Aussie and the Kiwi. All right, let's go over the Kiwi first. So, and I'm not doing a whole lot with the Kiwi dollar either. This is I'm very uninspired about the Kiwi. I am long some Kiwi dollars currently. Believe it or not, I'm actually long and short. So I'm long some Kiwi dollars because I am actually long the New Zealand Swiss, and I'm short some pound New Zealand, and but I'm also also long a little or short a little New Zealand because I'm starting to nibble on some Aussie New Zealand on the long side. Very small position, but I'm uninspired about trading the Kiwi itself. As you guys know, this chart. I'm going to reiterate from last week. This looks exactly the way that gold looked, and if I have to, I'm going to show you what I mean by that. So if you look at gold, back right here, I recall it was earlier this year. No, I guess it was last year. So I remember right at this point, we looked at gold and said, oh my God, it's getting bullish. We're broke this downtrend line. And I remember I got bullish gold. And I actually got bearish the dollar at that, for that 2-week period, I think. Gold started to break to the upside, and I'm like, oh man, gold's going to rip, dollar's going to pull back. And I actually started shorting some dollars there, which for me, I've been long the dollar for, the last couple of years predominantly, and this is like the one time over the last couple of years that I actually started shorting the dollar for a little bit. Gold rallied, and then all of a sudden it fizzled. It just fizzled out. And then I, reverted back to just playing the dollar back to the long side for the most part. But what you'll notice is we broke that downtrend line in gold. We formed a new bearish wedge and then broke lower. Well, that to me looks exactly like the Kiwi dollar, because as you guys know, I haven't been playing the Kiwi to the short side for the last 3 weeks or so. I really, and once we broke out here, I said, all right, Kiwi looks like it's going to recover. And what the Kiwi has done is it's really just fizzled. We broke that downtrend line. I'm like, okay, here comes some squeezing. I thought we were going to squeeze back up towards like maybe even 70 cents, but no, it's all we're doing is we're just forming this bearish wedge now. But we're very well contained currently. So I don't want to get overly bearish. while we're down here. I don't want to get bullish either. There's no reason to be bullish the Kiwi, in my opinion. Technically, no reason to be bullish fundamentally either. But there's really no reason to be super bearish down here either. So I think between 66.50 and 65, we're in a range, and I've noted that since last week, and nothing's changing here. So I'm gonna just 0.6500, 0.6650, and we're in a bearish trend, but range bound. Okay. What I would prefer to do, just to let you guys know, is if the Kiwi does rally to 66.50 over the course of the next 24 to 48 hours, I will try to get on the short side up there. I'd rather be short up there or long down here than trading it right here in the middle, if that makes any sense. So even a dip down to 65 cents probably give you now I personally, I'm not going to play the Kiwi to the long side. Kiwi dollar, not while commodities are so bearish. It wouldn't excite me to get long the Kiwi dollar down here. I'd rather be on the short side. I just know that there's pretty good support down here. For those of you that want to be long the Kiwi, though, I think that's the place to do it if you're going to do it. Let's go over to the Aussie. So here's the Aussie dollar. Very similar situation to the Kiwi. Broke a downtrend line. Thought we might get us a little squeeze here. But, the Aussie dollar is still having a rough time making lower highs, technically. 74 cents is key. Support 72.50. And but that's not going to be support today. Support today is going to shoot. I didn't want to do that. Dang it, man. All right, so 74 cents and 73 and a quarter. Kind of what we're dealing with. And if we break through that, then that exposes 72.50. But it's really just 74 cents is resistance. Keeps us lower highs. So it keeps the bearish trend intact. 72.50. Whoops. 0.7325. Okay. Let's go over to the dollar index. So the dollar index, here we go. We were setting up for a possible double top last week, as we discussed when we were trading just below that spike. And I said, if we close back above that spike, then we don't have a double top. So I think a lot of people got suckered in short last week, the dollar. Looks like we're range bound between 96 and a quarter and 98.10. Okay, now let's stop for a second and let's talk about the dollar. So I want to reiterate that people have pointed out, like a notable would be like Mark Dow. He pointed out last week, and I know we mentioned this, he mentioned that the dollar has failed to rally, or it looks strong technically, he mentioned, but it's failed to rally despite a lot of other drivers that would make the dollar bullish. We crude gold below 1130. We crude oil prices, we saw a little risk aversion. The dollar didn't catch any bid. So, the question is, well, why isn't the dollar rallying? If it's not rallying with all this good, or what should be dollar positive movements, what's the problem here? And in my opinion, it's exactly what Mark Chandler wrote last week, and he put it more eloquently than I did. But I'd mentioned that the reason why the dollar is not rallying, in my opinion, is the market is not convinced that the Fed is going to raise rates in September. And then Mark Chandler, he wrote literally that same day, like later on that day, he made note that the economists see the Fed, a high possibility, or possibility of the Fed raising rates in September, But the market is not showing that. The market is more like 60% of the market believes that 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 the Fed's going to raise in October. I think that's a pretty big disconnect. And one of the reasons why the dollar is not performing at this point is because people really just don't believe the Fed's going to follow through with it. If anything, that they're you ask a lot of Europeans, don't even think the Fed's going to raise this year. And I think more traders believe that the Fed was not going to raise until December, earliest. So, the market right now could really be caught wrong-footed, obviously, if the Fed decided to raise in September, which I believe they will. I believe China actually gave them the green light to do so. The move out of China last week, that actually gave the Fed to raise rates, the green light, I think, personally. Greece is not an issue right now. Matter of fact, Greece is showing some very positive developments, even with growth. And, if, we can get past another bailout, I think Greece is going to be pushed again to the back burner for quite some time. I'm not saying that their issues won't resurface, but right now, Greece is not a factor. China, the markets are stabilizing. China is not a factor. Those were the Fed's real hesitations in July. So if the Fed does actually raise rates in September, I think it's going to catch the market wrong-footed, because I believe the market doesn't think the Fed's going to follow through with it. So if you want to know why the dollar, if you look at this chart, you want to know why the dollar is just kind of confined to this range, it's because no one believes, or not most. But another point was made, and I can't remember who made this point, but it's a really, really good point. The reason why the dollar has held up the way it's held up is because you don't want to be caught short the dollar either when the Fed raises rates. You don't want to be the institutions that said, yeah, I was short the dollar, the Fed raised rates, and I got that trade shoved up my rear end, and we took a real big hickey because of it. You don't want to be that institution, do you? You don't want to be that hedge fund manager, do you? Hell no. The Fed raises rates and you're not on board, you're going to look like a schmuck. But that's the reason why the dollar hasn't taken off either. Because me, the market doesn't have enough evidence to believe that the Fed's actually going to raise rates and go through with it. Like I said, I think they're going to, but that doesn't mean that I'm right. And yes, I have a couple dollar long positions. I'm short the cable, and I'm short the dollar I'm long the dollar Canadian, and I'm long the dollar Swiss. But it's not like I'm aggressively long the dollar right now. But I can see the market's hesitations. I understand. But this is a very bullish trend. Pennants or triangles in a strong trend are continuation patterns, typically. So when you look at this chart pattern and you try to fade it, good luck. Okay, let's go ahead and take a look at the peso. Here's the peso. What's the opposite of bearish? Well, that's what the peso looks like right now. And, it's not just the peso, too. You got to look at all these other emerging market currencies. They're getting clobbered. Go look at the Turkish lira. Go look at the, Indian rupee. Go look at anything. You know what I mean? Go look at the South African rand. I mean, these emerging market currencies are getting clobbered. Peso's no different. 1648. For those of you who trade the peso, it looks like it's just going to accelerate here. Looks like you want to buy dips to 1635. So for those of you that are trading the peso, it looks like we're going to surge right through it. I'm just saying if you get lucky, 16.35 resistance at 16.49, right? It's bullish. Let's look at the Nordic currencies. Here's the US dollar, Norwegian krona. That thing's holding up well. If crude, look at crude, is crude hitting a new trend low? Hold on. Crude's hitting new lows on the day, isn't it? We're about ready to. 41.64. We're trading at 41.69. I mean, if crude continues to roll over, the US dollar, Norwegian krona should bust a move, right? Look how bullish that chart looks. My God, you know, 833. Tight range too. 807, 833. Tight range. Oops. Fat fingered that. 8 point, what is it? 33? Yeah, 833. Man, that looks, pretty bullish here. The US dollar, Norwegian krona. And then, if you look at, let's see, the Swedish krona, see what the Swedish krona, we got a dip last week because of the inflation data out of Sweden, right? But we didn't dip as far as I thought we would dip. We hit the 50% retracement and we're bouncing. But it doesn't look super attractive right now. That'll look more attractive once or if we break the highs. But I think that's more of a product of what's the euro doing versus what the Swedish krona is doing. So I don't know if I'd be excited about trading that right now, even if I could. All right, let me. Here's your bias chart, and I'm going to put this as bullish too. There's your bias chart. Go ahead and write that information down or take a picture, whatever you're going to do. Let me take some questions. So, out to your questions. Okay,